Now, we will start session 2. The topic is multi-stakeholder governance for a decentralized financial system. Let me introduce the moderator and panelists. Please proceed to the stage in the order you are introduced. The moderator is Professor Jun Murai from Keio University. The panelists are President Klaus Knott, Dr. Adam Bach, Dr. Shinichiro Matsuo, and Mr. Brad Carr. To start this session, Commissioner Toshihide Endo will deliver introductory remarks on behalf of Japan Financial Services Agency. Commissioner Endo, please.
Good afternoon, ladies and gentlemen. Thank you for attending today's seminar. At the Buenos Aires summit last November, G20 leaders agreed to step up efforts to ensure that the potential benefits of technology in the financial sector can be realized while risks are mitigated. So how do we put this vision into practices? Every regulator faces the challenges of striking the right balance between promoting innovation while ensuring the public interest in areas like financial stability, consumer protection, and AML-CFT. Historically, the simplest way to ensure the public interest was to use regulation. Technological innovation, however, poses challenges. First, regulation could stifle innovation. This could particularly happen if regulations are brought in to control every imaginable risks before the benefits of the new service are realized. Second, regulation may fail to keep pace with innovation. Recent technological development allows the unbundling of financial services which were previously in the hands of financial institutions providing full-line services. Fintech startup could now offer consumers with a specific line of services, P2P payment, for an example, and in some cases, they rebundle financial and non-financial services to better meet the customer's needs. In contrast to such development, financial regulations are imposed largely on an entity base. This could mean that the same financial activities could face different regulatory treatment depending on who conducts such activities. To ensure a level playing field and prevent firms from exploiting regulatory loopholes, we need to explore function-based cross-sectoral financial regulations. This is a big challenge for every financial regulators. The JFSA is not an exception and has started discussion with the advisory panel. The third challenge is maybe the most fundamental one. Financial regulators use regulations as its primary tool for achieving regulatory goals or ensuring the public interest. Distributed ledger technology, such as blockchain, a theme for this session, however, may allow direct transaction between financial customers or market participants without intermediary financial institutions. In such a decentralized systems, financial institutions may play a smaller role in the financial system going forward, and regulating them alone may not be enough. This would pose new challenges for regulators trying to protect the public interest. Given these challenges, it may be time to consider whether this approach will be workable in certain circumstances. Japan proposed to take up this issue with the Financial Stability Board as part of its G20 presidency. The FSB explores the implication of decentralized financial technology and submitted a report to the G20. I would like to thank the FSB for its dedicated work. To address these challenges, it may be useful to take reference from the development of the Internet. Much like the financial sector, the telecommunications sector used to be subject to stringent rules by national regulators. The ICT revolution in the 1990s, however, transformed the industry. The Internet largely replaced the dissemination of information and communication functions previously performed by regulated intermediaries such as telephone companies, broadcasting stations, and postal services. The Internet is managed in a way that is entirely different from the conventional reliance on regulations, with no national nor international regulators. A multi-stakeholder approach is taken for the Internet governance, which brings together a broad group of stakeholders. This includes government, the private sector, academia, and civil society, which all participate in discussion and decision-making. Let me take an example of the Internet Engineering Task Force, or IETF, which is an open global community responsible for developing and reviewing the Internet standard specifications. The IETF is not a legal entity and has no formal membership. Anyone can participate in discussions, and documents and public and freely available. Decisions are made not by voting, but based on a process called rough consensus and running code. In this process, the IETF participants strive to make their decision by the consent of all participants, though allowing for some dissent, and to have the actual product of engineering trump theoretically design. Not only are the technical standards for the Internet essential for securing interoperability, they are also directly related to the broad public interest. This includes the protection of users' privacy and personal data, and Internet accessibility for people with disabilities. The multi-stakeholders' participation and mechanisms for the Internet, coupled with its openness and transparency, seem to have succeeded in striking the right balance between promoting innovation and securing the public interest so far. As such, the emergence of the Internet in the telecommunications sector has shown us that regulation may have a limit. A multi-stakeholder approach has a growing role to play to complement traditional regulations. DLT shares some common features with the Internet, such as decentralization and broad autonomy when we discuss the future landscape of and a possible governance approach for a DLT-based financial system. We need to be mindful of the bigger picture with long-term perspectives. With this in mind, we have invited panelists from a variety of backgrounds. As moderators, we are honored to have Professor Jun Murai of Keio University. He is called the father of the Internet in Japan, or maybe better known as Internet Samurai globally. His insight and experience on developing the Internet governance would be of great importance for the discussion in this session. I hope that this panel discussion would serve as a possible model of a future multi-stakeholder dialogue for a decentralized financial system. I look forward to the discussion today, and going forward, the JFSA would like to continue to provide opportunity for such dialogues. Thank you very much for your time.
Thank you very much, Commissioner Endo. Let's begin the panel discussion. The moderator is Professor Jun Murai. So, Professor Murai, the floor is yours.
Okay, thank you very much, and thank you very much, Commissioner Endo, for the great introduction remarks. And then I was thinking about people may kind of puzzled with the title of the session, Multi-Stakeholder Governance for Decentralized Financial System, right? Okay. I thought the banks are a decentralized financial system, but we are actually targeted to discuss about the blockchain, but we are not saying as a blockchain. We're gonna use the term the DLT. Okay, everybody okay? Right? DLT. All right. Anybody confused with the DLT? Nobody. Thank you. That's great. And then the crypto asset, right? Okay, crypto asset, not currency, right? And then not Bitcoin. All right. Anyway, so yes, new technology are introducing and then impacting a lot on the global the financial system. That's true. And then the decentralized financial system sometimes mean that kind of beyond the coverage of existing financial system, and then something is happening with new technology on the internet, as Commissioner Endo mentioned. So those are probably the issue we need to discuss today. And then so we, as Endo-san's introduction, so we have a variety of the expertise background as a panelist. So, well, probably I should introduce each of the person first, and then get into the discussion. So we have on the further end, we have Mr. Brad Carr, the Senior Director of Digital Finance Institute of International Finance. Thank you for attending. And we have Professor Shinichiro Matsuo from Georgetown University, who's an expert on this area and who's been, working as academics for this area. So, thank you for attending. And Mr. Adam Back, CEO of Blockstream, he's an expert from the technology background and leading the area of technology globally. So, thank you for attending that. And Mr. Klaus Knott, Vice Chair, Financial Stability Board, and the President of the Netherlands Bank. Is that pronounced? Well, sorry. Anyway, so Klaus, okay. So we already discussed about the the FSB's report on this area of kind of very much summarized and covered very good discussion points already, and so I'd like to ask a class for the explaining to the audience and ourselves about the report, please.
Yeah, so I would like to begin also by thanking the Japanese G20 presidency for this opportunity to present here the FSB's report on decentralized financial technologies. The report came out yesterday, so the timing here is excellent, I would say. And not only is the timing excellent, also the location here is quite fitting. The island of Kyushu, where we are now, has always played an important role in the diffusion of technologies coming from abroad. It's only 150 kilometers from here, where the former Dutch trading post Dejima is, and that was the point of entry for sort of previous financial innovations, or non-financial innovations, I should actually say, like photography, the piano, but also stuff like chocolate and beer were first brought into Japan from this island. Now today, I understand that this is a very vibrant community, a vibrant startup scene with entrepreneurs from all over the world, and I think it underlines the importance of international exchange for the diffusion of technology, the importance of preserving an open global system, something, let's say, only 5 years ago would have gone without saying, but I think in today's setting it's worthwhile reminding ourselves every now and then. Okay, but let me focus on the report now and mention a few of the highlights. The first highlight that I would like to mention is that there is an acknowledgement in the report that we are still quite some distance from a widespread adoption of fully decentralized technologies in financial services. And the emphasis in this sentence obviously is on the word fully. And what does it mean? Well, in the report we distinguish 3 separate dimensions along which you could have decentralization. The first is in decision making, so away from a central intermediary. The second is risk-taking, away from the traditional balance sheets. And the third one is record-keeping, away from central records. The majority of the existing applications still rely on a central intermediary in at least one, and in most instances 2 of these dimensions. And with the exception of crypto assets, also most of them are permissioned and not permissionless. And sort of the difference being that permissionless would be much more open to the general public, whereas permissioned is somewhat restricted, both in access also as well as the consensus building mechanism that is behind the technology. There are good reasons for that. Most of them have to do with scalability and accountability. But that said, there are still, as we speak, compelling cases, compelling use cases in, for instance, payments and settlement, when it comes to cross-border payments and settlement solutions, for instance, in trade finance, usually to verify information about stakeholders and counterparts, and in capital markets, usually to further automate financial services. And we saw some examples of that in the previous panel as well. And in that previous panel, it was already acknowledged the importance and the challenging act of balancing opportunities and risks. Well, that is also very much true here. Decentralized technologies can bring a lot of benefits to financial stability to begin with. Greater competition, greater diversity in the financial system, reduced reliance on short-term debt financing, and thirdly, reduced systemic importance of existing entities, such as banks that are deemed too big to fail. Yet these technologies could also be used to avoid regulation or to engage in misconduct. Especially for permissionless blockchains, there could be sort of diffused accountability and also complex legal questions around liability. Ironically enough, these decentralized technologies could also create new forms of concentrations, for instance, with respect to a core group of developers or new infrastructures. So overall, it's clear that there are many public policy objectives at stake here, and financial stability is, for us, central bankers and regulators, the overarching public policy objective, but that matters to society at large, I would argue. Innovations that would result in financial instability are clearly not sustainable. Moreover, stability then also provides the basis for, let's say, some related public policy objectives, such as consumer protection, and also combating fraud and money laundering, issues that are also relevant in this space. Now, moving on from the substance to dialogue, we will talk about the importance of this multi-stakeholder dialogue in a minute. For us, as regulators, it is important because the dialogue allows us to learn a bit more about the technology, and it also then helps us to ensure that our supervision continues to be effectively. And that's also one of the reasons why the FSB is so actively engaging in this dialogue. And if you look into the report, you can also see that this report has also been informed by many, many forms of consultation and outreach with a wide range of stakeholders. But dialogue should also be a two-way street. Dialogue should also help the developers to better understand that there is actually this concept of financial stability out here, and that there is a community called financial regulators that have a legal mandate to ensure that financial stability continues to be safeguarded. As noted in the FSB report, and this can also help ensure that these public policy objectives are already considered by design of these technologies. Sometimes, I would say, having a dialogue simply means that we learn to speak each other's language. That's an important step that should not be underestimated, and that is also the reason why many regulators, including the Nederlandse Bank, have toyed a little bit with regulatory sandboxes, innovation hubs, etc., that had as a main purpose to lower the barriers and to create the opportunity to have a more informal sort of discussion of each other's objectives, each other's do's and don'ts before it gets to a more formal process of licensing, etc. Now, let me, for my opening remarks, leave it to this, and obviously I stand ready to elaborate a bit more in the broader discussion. Thank you.
Okay. Yeah, thank you very much, Klaus. I think it's a nice overview about the report, and then it was issued yesterday, formally, right? So that's great. And yeah, starting from a kind of a technical point of view, the decentralized system is sometimes on the system area, we call it a distributed system. And then the strengths of a distributed system in general is that if something, I mean, rapid growth, and then also the reacting with something happening in some place, and then it's a local reaction can be done, and that's because it's not centralized, right? So that's a decentralized system characteristic in general. But let me, so what was the order was from a technological things. Therefore, let me, start with Adam about talking about your background, and from. You can react to the report, and also your thoughts about this subject on the panel, please.
Yeah, so I think that there are some good analogies to be drawn from early stage internet adoption. So essentially there's new technology which enables new use cases and moves a sphere of sort of society's mechanisms into open internet, into an open networking sphere. So if you look at the transition from telecommunications, which were largely operated by often state-owned monopoly companies, to the open internet, one of the benefits you see is rapid innovation, as many, even individuals or small companies and startups can evolve very quickly and sort of bring about positive improvements in function and cost base for the end user. So one way to look at the blockchain is it's just another step in that move to open networking. So now, with the distinction between crypto assets and blockchain and the current financial infrastructure, so the current financial infrastructure is largely based on virtual private networks or physical private networks, leased lines, firewalls. So basically keeping internet away from the infrastructure for sort of security and safety reasons. And that's really because of the sort of security architecture of it. And the main, sort of a major new innovation of the blockchain is introducing secure tokenization, so that an asset can be represented by a token that has its own keys that control its spendability, and introduces programmability into that. So it allows, because the tokens themselves are have security controls on them, it allows them to be safely used on an open internet without needing to be necessarily behind a private VPN. So that enables a lot of things, benefits to, for adoption within the existing financial ecosystem, because today, when you make a transfer internationally, you have to go typically through intermediary banks, and people worry about the creditworthiness of the banks and the reputation of the banks in between. And increasingly in sort of emerging market jurisdictions, the banks there have difficulty maintaining corresponding banking relationships, which provides reduced sort of access to international banking for business settlement in those parts of the world. So one of the things that using a secure tokenization approach that the blockchain enables is that you can transact without trusting intermediaries. So that's because it's stated that there is no need to have a trusted intermediary, or in other words, if you do pass a payment via an intermediary, you can guarantee that the final payment is settled atomically. So either the final payment reaches its recipient or it doesn't, and so nobody in the middle who you may or may not trust is really affecting the functionality and security of the payment. So similarly with the so-called smart contracting that comes with blockchain, and so Bitcoin itself has a security-focused embedded smart contracting language. It's quite interesting because as well as the settlement function I described, you can move parts of what are today executed in back offices in the sense that, if there's a structured product or a derivative of some kind, it has an issuer and underwriter, and when it's settled or executed or the option called, that is a process that happens in a database system of a bank somewhere. And in the blockchain world, that can actually be publicly verified. So I think the blockchain has some interesting benefits to regulators in reducing the need to trust intermediaries. So that's partly about public auditability. So because it's a public network, individuals, smaller financial institutions can verify everything about the transactions clearance, about the number of units of a given asset. It tends to be all kind of real-time gross cash settled, so there's not direct accounting for leverage and naked selling and things like that, but that reduces sort of risk of contagion and credit buildup and that kind of thing, and provides a much more real-time view of the health of the system, where today it's based on audits and regulator access to the information, accounting statements of it, and so because it's a very complex global sphere and not everybody is adopting the same rigor in accounting standards, you can get risk buildup. So I think the more real-time assurance that you are not exposed to third-party risk is quite valuable. And I think about Bitcoin and crypto assets. So I think they help with, they started this technology track, and there are other examples of technology that starts in the consumer space and works its way into the enterprise space. So I think they are the electronic cash for the global internet world, and cash is a useful and important part of a functioning society, as well as conventional savings and mortgages and pensions and things like that. So I think that's interesting. I don't see it, at least today, as large enough to affect sort of monetary policy for major currencies like the euro and Japanese yen. So I'll come back to some more comments later in the panel.
Okay, thank you very much, Adam. That is giving us a very important view about the technology, and sometimes it's in detail, but then so the VPN lease line versus kind of open internet, and that impacting the cost of the operation as well, and then the investment about the kind of company. So yeah, in that sense, and then so Brad, other kind of existing financial service system and the businesses, and how do you think about the those technologies position in the in general?
Sure. Well, thank you, Miro-san, and thank you to the JFSA for the invite and the opportunity to be here. We're privileged to enjoy a great relationship with Himeno-san and Shirakawa-san, and I learn something from you every time. You're very generous with your time. Klaus, thank you also for the history lesson. I wasn't aware of the Dutch exposure here. I come from a fishing town that's probably best known for a Dutch shipwreck in 1629 that had a fairly bloody and mutinous aftermath, so I'm glad to know that your early explorations went a bit more successfully here than they did in my homeland. I'm probably going to be a little bit of a blockchain contrarian, somewhat at least, or at least a bit of a cautionary note. As we look across the banking industry, there are areas of opportunity and adoption, but there's probably some other technologies that I think are a little bit more urgent and front of mind. And I think if I can call out one really important paragraph that was in the FSB report, towards the end of the introduction, it highlights this notion of the decentralised technologies and other technologies that may support decentralised activity, and specifically mentions both cloud and machine learning. And I will respect that we're talking blockchain here and not completely revisit the previous panel. But certainly as we look at what's happening in the here and now across the banking industry, the key areas of technology adoption, the strategic investments and the ways that are vital to repositioning businesses and keeping pace with customer expectations, it is primarily about cloud and machine learning, and probably also the APIs to enable data sharing frameworks and open banking interfaces. Now that said, I think there's a great opportunity on the horizon in the blockchain space that I want to come to. Perhaps while I'm still at this conceptual level, I want to pick up another point that Mirai-san prompted me on earlier, and that's around the partnerships and cooperations of the banking industry and tech firms. And there is very much a symbiotic relationship here in that, I think banks and insurers generally have extensive customer reach, have strong levels of customer trust, but are not always very good at innovating. And on the other hand, you have the tech firms that are very innovative and have zero customers in most cases that they can push the fruits of their labours out to. So there is a symbiotic relationship there that I think is vital, not only to the success of each of those sets of companies, but also in particular to the wider economy and ensuring that the great innovations that are being done by tech firms don't wither on the vine and rather do actually get deployed into the economy where they can hopefully have a productivity input. So in terms of where the industry is using and adopting cloud, so we certainly adopting blockchain, so certainly we see, there's a Freudian slip to reinforce my opening line. So we certainly see emergence in areas like record keeping, trade finance, syndicated loans. It fits well to those complicated transaction types where you have multiple parties involved. Trade finance, I think, is a really interesting one, and one where we have a product area that is ripe and arguably overdue for innovation, still very heavily paper-based in a lot of cases. But also one, of course, you have the complexity that it is inherently international by its nature, and it needs to be able to overcome the challenges of operating across different legal systems. What I find really fascinating, though, is if you were to move to a model where you have smart contracts, the transfer of a token triggered on particular events, you perhaps remove a lot of the frictions, but you also fundamentally change the basis of the liquidity provision in the area of trade finance, in terms of the timing for the passing from buyer to seller. And that's probably going to be great for some counterparties, and it's probably going to be challenging for others who enjoy the working capital that they currently have out of existing structures. And the way that across the risk community we tend to think of trade finance as a low-risk product type, self-liquidating, fully secured by tangible goods. The outlook for that industry and how that credit provision operates, I think, will change. Within record keeping, I think actually the most encouraging example is actually coming from the official sector. And if you look at areas like the Republic of Georgia, for instance, and what they've done with their property register. And that's a case where I think where you start to have property records being maintained on different nodes via a permission blockchain across a range of different locations. Apart from managing some geopolitical risks, I think that probably gives an investor in emerging markets a lot more confidence in terms of the security of their property rights, knowing that it's being maintained via those multiple nodes. So I think that's all very helpful towards wider investment and capital flows. And I guess I raise record keeping there because it's probably a good segue to the case that's on the horizon, which I think is the really big opportunity, and that's around digital identity. And this is an area that I think the industry has historically been grappling with, as has the official sector. It's really important in terms of areas like AML and KYC and the opportunities and the need to get better in that area and the need to get more efficient. At our annual membership meeting last year, the Bank of England, Hugh Van Steen, has quoted a figure that the UK banks spend more on AML than the UK government spends on prisons. We are spending an enormous amount on AML, yet based on Interpol numbers, we're catching 1 to 2%. We're not getting a very substantive return on the level of investment that's being made, and we need to get better at that. And of course, the concerns around AML have reinforced correspondent banking retrenchment, de-risking, and it's had negative impacts for financial inclusion. So there's a number of reasons there where if we can develop digital identity solutions that are interoperable across firms, across borders, between the public and private sector, I think blockchain could contribute to something there that really would be quite fundamental. But I want to also add that apart from all of those reasons, there's also a great commercial reason why banks and insurers will increasingly be moving to digital identity. As we move into a platform economy and the greater interaction between banks and other product providers and either bank platforms, the likes of Erste's George platform is probably one of the more striking, or external platforms provided by tech providers, you're going to have this notion where the digital identity is going to be at the forefront of the customer relationship. So I think there's a number of reasons why that, I think, is the big burning emerging theme and where blockchain can have a really significant role to play. I might pause there, but I'll just flag a couple of markers that I might like to come back on. I think the underlying data that you have and how that is sourced and maintained is a really critical thing, irrespective of whatever technology you're using. And we also need to consider that there is a governance question that others will probably elaborate on, but I think it also leads to the other burning question at the moment, which is data localization. And where we are talking about either technology transactions, structures, record keeping, the passing of data, there are a number of issues internationally at the moment that are obstructing the free flow of data. And this is an important one for the financial industry, and to some extent blockchain might help to enable interoperability in overcoming some elements of localization, but it might also run afoul or be constrained by localization requirements that some countries put in place.
Okay, yeah, thank you. Thank you, Brad. And let's go to Matsuo Sensei. Well, I should say Shinichiro. Yeah, that was a promise, but okay. Anyway, so looking back, the history of the internet, as mentioned by Endo-san, we kind of started to develop the internet and the design and deploy, and basically from the research entity and universities, and then checking and evaluating and the design, make sure the rules like a transparency and the open source code and that kind of thing, basic thing, and then extending the internet to cover the world. So the blockchain, the involvement of academics and the evaluation and for the scalability, safety, security, and the other thing from the crypto, kind of a level, and so those things were kind of issues today, obviously. But then how the academics and then your groups are involved.
Okay, thank you. Thank you. And I would like to utilize that. So I'm going to try to explain, to answer that question. Okay, I think that the question is how the academia can facilitate that multi-stakeholder dialogue or maturing that blockchain technology. Anyway, so before that, so I would like to introduce myself. So I'm a research professor at Georgetown University, and I'm co-founding a BSafe.network. This is a research test bed. In the case of the internet, so NSFNet or CSNet or other kind of test bed provided by government budget facilitate that development of the internet technology. So we are doing the same thing for as a NSFNet or BSD for the blockchain technology, and I'm also engaged in the standardization activities at ISO TC307. And I would like to explain my past history. So in the 1998 to 2000, I was engaged in there. So one digital cash project conducted by the Bank of Japan and NTT. So this is called as an internet cash. And so this is a smart card of that project. At that time, so we can transfer the Japanese yen by utilizing that attachment file or email. This is a similar kind of thing that, so what we can do by Bitcoin. But anyway, so this is an interesting example of that, how the engineer and the regulatory or the government work jointly to create that compliant data cache. At the time, so engineers in NTT had a extensive discussion with Bank of Japan to make that so digitalized Japanese yen banknote compliant to the Japanese regulation. This is a great example of that, how the collaboration among engineers and regulator makes a great technology. And this is pictures of that one academic conference called Financial Cryptography. Adam Back is familiar with that conferences. So this conference, Financial Cryptography Conference, happened in 1997. This is the first era of the e-cash or something. And at that time, Mondex or Visa Cash was invented. And the main participant of that conference are the cryptographers and engineers to create some cryptographic techniques for the financial services. And the main part of this, at the time of beginning of this workshop, the main part of participants are the cypherpunks like Adam Back. Anyway, so this conference is usually held in Caribbean island to discuss freely about that technology. Before the Bitcoin happened, the most of create of that financial systems or financial regulation were only the regulators. But after Bitcoin, anyone can create some mathematics as a part of the law of the financial systems. So this figure shows that that cryptographer and the engineer are becoming the creator of the part of the systems. And the keyword is permissionless. So we use that word so often but permissionless innovation is a keyword on the that kind of public blockchain or talking about the internet. So permissionless innovation empowers all edge to create a new innovation ecosystem. It increases the number of the potential innovators, and it is a great solution for the innovation dilemma. So in the case of the internet, I'm not. I think that Junmai is a better person to explain about that. But in the case of the internet, this movement unbundles the ownership of the communication channel and the right of the multilateral communication, decentralized architecture, routing of BGP, and layering technology like TCP/IP create a great nature of the permissionless innovation for the communications. And this unbundling facilitates producing new services, business, and ecosystem from grassroots. This is a great thing, and so we received many fruit from that permissionless innovation of the internet technology. And of course, the good news. So if we apply the same kind of thing to financial services, and we can have that. We can produce. We can have the new services. We cannot imagine now. And by connecting the internet and the finance, this is a great thing. But it's the same thing as the internet. So we have that more things to be considered. For example, regulator will face a difficulty to enforce regulation because of the change of the target to regulate, and so that autonomous nature of that system is increased the difficulties, and anonymity is one of the headache for the regulators. But anyway, new phenomenon in terms of financial stability caused by mathematics. Mathematics means the code from grassroots. So this is things may happen from now for the finance systems. And this is, I think, the key slide for that panel discussion to discuss about this multi-stakeholder. So at this time, mainly there are 4 stakeholders in this blockchain ecosystem. The first is the regulators, the second is the open source style engineers, including cypherpunks. The third is a business entity, and the fourth stakeholder is consumers. Unfortunately, among the regulators and open source engineers, there's a few connections. There's no sufficient connection to have a common understanding each other, and unfortunately, there's no common language or common defined terminology, and it's hard to regulate from regulator to open source style engineers. And recently, so very many startups happened, and so that startups tend to start business before maturing technology. But so it could be that source of so many incidents or something. And of course, the business entity want to avoid friction against the regulators. But so regulators have difficulties to regulate the business side, so due to the difference in speed. Of course, the consumers need transparency for business side to protect their own assets. But so unfortunately, so there are so many cases that kind of transparency missing. So anyway, so this is a current situation and current situation among the stakeholders. This is the last slide, and so this is a reason why the collaboration by multi-stakeholder, so it implies innovation and stability, so we need both. And I think that the first step needed is to have a common understanding among stakeholders on regulatory goals, because this is also why regulator create regulation. And I don't think regulator want to kill innovation. And I don't think that so open source developer committee create a new crimes. But so we need to have that common understanding of regulatory goals. This is the first step to have the multi-stakeholder dialogues. And now is a code as a part of law and order, even for the finance. So we need joint works become a preventive action to some bad situation against that regulatory goals. Of course, the blockchain and DLT needs a multidisciplinary discussion because that it is created by the computer science, cryptography, network, economics law, and many kind of things. Anyway, so this is the reason why we need the multi-stakeholder dialogue and discussion.
Okay, thank you. So we kind of, going the first round. So I think it should be pretty free in terms of, kind of discussing anything. But, for Brad, you saw that the stakeholders model, and then there are a lot of stakeholders. But even today, I heard a lot about kind of, there is a, if we see globally, right, and then the internet access is reaching almost to everyone, and pretty soon, and then so some people suggest that it's a there are still many people who are not accessing the internet, but then it will be covered. But in that sense, the same discussion for there is a people who are not available to access bank services around the world, and then so do you think those people to be a stakeholder of this discussion?
Well, I think we have an aspiration, I think we all do, of financial inclusion on behalf of all of humanity and to not exclude anyone from that equation or that discussion. And I think you make a very good point that whilst we talk about trying to expand the reach of the existing financial system, it is also important that people have access to the technology that's underpinning that, and otherwise you run the risk of financial exclusion if somebody is in an area that doesn't have the right communications infrastructure in place, for instance, as a precondition for that. But if I can pick up another point that you, I think, more subtly allude to, I think if we have a network or a permission blockchain that's operating across borders, does that in itself mean that everybody is legally able to use that? What if you have a particular country that passes a law, for instance, that says all transactions that relate to our citizens must be processed within our country and only within our country? How does the blockchain stand up in the face of such a requirement? Or where you have specific protections around data privacy, which is obviously an emerging field across the world, how does that stand in terms of whether all nodes across the network are necessarily bound by the same protection standards that might apply for the person providing data or whose data is loaded onto that blockchain? I think you've got a few specific cross-border legal questions there. And I want to from that sort of make the point that I think this is where we in the industry need to be very sympathetic and very understanding of the task that people like Klaus and the FSB and the Bail Committee and the IAS all have, that our supervisors all are grappling at the moment with the fact that they've got their traditional mandate as a banking supervisor or an insurance or security supervisor. And the subjects we're talking about are heavily affected by the scope of a privacy commissioner or a competition commissioner or a data commissioner. And I think people are working through the complexities of how those different issues or different mandates apply. And quite often they manifest in ways that are different in each country, which makes it even more difficult for some of our partners in the official sector to be able to work through those issues on an international basis. That said, we have to keep trying, we have to keep persisting at that, because the very nature of what we're talking about is inherently international. It is all about international operability. So we need the regulatory community to succeed in this space, but at the same time we need to be acknowledging and recognising the enormity and complexity of the tasks that they face. And the ask on us in the industry is probably be doing, and particularly in bodies like the IF that are international, is we need to be looking for anything that we can be doing to assist that development.
So let me see, Adam, you mentioned, in the kind of previous section, the very interesting thing, and you mentioned about the trust, and also, kind of open standard and other things. But connecting from the Brad's talk, then he mentioned about the international things, and then the internet is certainly not the international space, but the global space, right? And so as the kind of a blockchain and other technology on the internet is very much on the working on a global space. Therefore, it's a pros and cons for doing that. And also, as Brad mentioned, then it's international and the global space, and if they are working together, I mean, probably internet space is being used for the many industry like that, right? So there is an international mission, there's nation mission, but there is something working nicely on a truly global space, and coexisting, and then probably supporting each other. So anyway, in that sense, and how that technology is going to be contributing in terms of those trust and the other issues of the financial systems, and from the kind of technology like a blockchain.
Yeah, I mean, it's quite similar to to the internet fabric, in a sense that there is something very low level that is global, which is the ability to stream packets of information from anywhere to anywhere. And then there are many layers above that that build up to internet banking, browsing the webs, doing video calls with people all around the world, and it being quite permissionless generally, that somebody in India can have a phone call with somebody in Africa, and there's nobody asking permission whether you can route a video call to this country. And 25 years ago, the concept that you could route a video call like that would be very worrying to telecom monopolies, for example, that would erode their financial revenue base. But I think, so I think if you think about that as the low level, then there are many things that happen above it. And where the trust comes in is, in the higher levels. So, the bottom level, if you like, is a kind of internet global electronic cash that is very simple. It just pays a recipient address, a certain amount of coins. But the way that most people interact with crypto assets is through a crypto asset exchange, so like a Bitcoin exchange, and some existing financial institutions are starting to get involved in providing markets for these. So my company Blockstream makes a settlement network for crypto assets called Liquid, and we have a joint venture with Digital Garage, which is a Japanese public listed company, and Tokyo Tanshi and ourselves, where we are developing a settlement network to make use of the regulatory sandbox in Japan to issue a Japanese yen coin that's 100% backed by Japanese yen bank account deposits. And the way that sort of crypto assets in the electronic cash world interfaces to the exchange and trading world is sort of similar to the way you interface with a bank. So you have cash withdrawals, like literally you go to an ATM machine and you take out a certain amount of cash. But when you're talking about savings accounts and pensions and trading accounts, those have information required of the user. The institution wants to know who the user is, and that is almost globally the case with cryptocurrency exchanges. And so you can see that as the kind of bridge. And I think it's particularly interesting and important that we have in the crypto asset space access to Japanese yen and euros and US dollars in that format, because once they're in that format, you can do blockchain assurance of different types of trade. So particularly the joint venture that we have in Japan is about, it's called Crypto Garage. It's about providing a way for OTC traders to swap Japanese yen for Bitcoin without exposing themselves to counterparty risk. So this is actually targeted at institutions, so existing exchanges and so forth, but you could see that being opened in the longer term for retail users of those exchanges, and then being protected from, in the consumer protection aspect of what the regulator is looking for. One part is that the custodian shouldn't fail or misuse client funds. So in this model where you see more full use of the programmability and trust minimization properties, you can in fact use an exchange which operates like E-Trade or a stock exchange without providing custody to the exchange. So the buyer has Japanese yen in a cryptocurrency kind of format in a hardware wallet. So it's it's offline, it's not attackable on the internet, and the seller likewise. And they place their limit orders on exchange or in the OTC market that gets settled onto the blockchain, but at no point is there third-party custody. So I think these kinds of trust minimization arrangements are important for the future in reducing security issues. So the historic security issues we've seen in the last few years are really down to not making full use of the technology. So the exchanges in the past have operated on the basis of full custody, and then they've made custody mistakes.
Interesting. Then, Klaus, then that's going to be going to the kind of regulation discussion very much, right? So, what do you say for the this type of new test bed that he was talking about? The regulatory sandbox is a test bed, and then so introducing connecting with the existing financial system with those DLT type of technology.
Yeah, indeed. I mean, the fact that the decentralization is not yet fully complete means that traditional financial intermediary or other intermediaries continue to play a role, and that has allowed us thus far from the regulatory community to focus on those points where sort of the new technologies enter into the financial system. For instance, about a year ago, we issued a paper on crypto assets, and there we focused very much on the interaction of the crypto asset ecosystem with the financial system, and in particular banks, so banks' activities with crypto assets, and exchanges, initial coin offerings, and the like. So as long as that is the case, I think a lot of what we traditionally do, a bit of adaptation here and there will be sufficient for us to take this new development into account. Of course, it becomes a different ball game if we indeed were to have fully decentralized technologies where intermediaries, balance sheet, and central records would not play a role anymore. Then we would have to more fundamentally think about probably incorporating our regulation into the design of such products, into the code and the like. Let alone, and that is also that I don't have an answer to yet, how in that such circumstances, we would deal with the cross-border aspects of it, because essentially a server you can easily replace and put it in a different jurisdiction and continue to offer the same computer-based services from that same server. So that would require simply even more international cooperation than we are already seeing today, because this way of decentralized financial technology is clearly not bound by the traditional geographical borders.
Yeah, that's exactly. And then also, another issue about, kind of those new, use of a commodity technology. And then, there is he mentioned about the regulatory sandbox, which is a test bed. And the test bed, then, creating the new innovation, new findings, new way, new technology, introducing a new technology, and very dynamically, we can do that. And if that is the case, then it's a regulation is that something what happened, and then then we need the regulation, or we have a more forward thinking about what will be happening next. But then because of the speed of the new technology introducing, and then so also a speed of the kind of price change, basically it's a commodity, and then the investment cost is going to be a very much lower, probably not only assets but also the operation as well, right? So then so big impacts, right? So.
Yeah, if I can just mention the example of securities trading. If you look, there is many parties involved nowadays, CCPs, dealers, securities depositories, and all of them now, in the process of security transaction, all of them charge a fee, and all of them take a certain amount of time for settlement, so that today, the total settlement time is around 2 days. Well, that, I think, is an area where there is a huge opportunity, where DLT could offer much more operational efficiency, shortening the settlement time, lowering the transaction fees that are currently involved. There, I think it has a lot of potential for disruption.
Okay. All right, thank you. Any message? Yeah.
Can I add one comment on that? So I share that view that being able to reduce that T+2 down to real time is a desirable benefit, and I see that +2 as essentially being a bug in the system. Some would argue that it's a feature, and obviously there are some people that are able to use the liquidity that they get from that to enable other areas of trading in the system. So I don't think that's a reason to not do it. I think we definitely want to progress in the efficiency drive that you outlined from that. But we need to be conscious that there will be some market knock-on impacts from that, and it will change the landscape of how liquidity is provided into certain markets, as it does for the trade finance example I gave earlier.
And I would like to jump in this discussion. Okay, so Murai-san said about the difference between that international and global. And okay. The first thing I would like to say that it's okay. The needed thing is some kind of standard, understandable for all stakeholders. Standard which is friendly to regulators. Standard which is friendly to technology side. Or some kind of standard or some standard-wise things is needed. And last week I was in Dublin for the TC307 meeting. ISO TC307 is now standardizing many things about the blockchain and DLT. But so some part of the discussion is good, but some part of discussion, so I think that the ordinary ISO process is not appropriate, because that so ISO TC307 has 2 in-person meetings per year, only two meetings. And so they have that 3 or 4 steps to publish that standard. So it takes 2 years, 3 years to publish standard. And that each steps needed voting from nations. So it takes much time to create a standard. And but so Murai-san says that so technology is rapidly growing in this world, and in some cases, so ordinary style of the standardization is not appropriate for the blockchain and DLT. And this is the reason why so we need more sophisticated ways for the multi-stakeholder dialogue to create some good standard friendly for all stakeholders. So, and so the previous question is about sandbox. And so most of, I'm not familiar with that, but so many of the sandbox project is closer to the each nation. I don't think that so there are many sandbox projects which is cross-border. So many countries join to that one sandbox. But so the BeSafe.Network project, this is I'm creating is a group of international universities, and so each university has a blockchain node, and this is the actual network, separated network, so the experiment from academic side. We already have the 31 universities from all over the world, and the 40 countries as a part of the BeSafe.Network. Of course, so we are expanding that network, but so we need some kind of the global scale network with multidisciplinary and multi-stakeholder to create that rapidly growing technology.
Adam?
Yeah, so the regulatory sandbox that I was referring to is domestic Japan only initially. And I think it's important to bear in mind that the Japanese market has the currently largest market share in trading volume by country in the world. Previously, a few years ago, it was China, but Japan took over. So it's related to forex markets and interest to trade, basically. But I do think it would be interesting in the longer term to see access, as this technology proves itself in a domestic sandbox, to see that opened globally, because the forex markets are global, and the kind of trust and security you get from a top-tier issuer of a Japanese yen coin is something that other countries would want to participate with and see similar tier issuers in other countries. And I think there have been discussions on the panel, this panel and the previous, about having permissioned versus permissionless. So I think, generally speaking, the open networks win because you get faster innovation. And permission tends to mean you need a legal contract with a company-to-company contract to develop on that network. However, there's something in between as well, which is whether the network is publicly auditable. So just because something's publicly auditable doesn't mean that you would necessarily be able to make a transaction, but it does mean that the public at large can run some software and in real time get an assurance of integrity of the record keeping of a distributed ledger. So I think the public auditability is an important kind of baseline that we should look for. When you have a DLT that's behind firewalls, that sounds an awful lot like the status quo in effect, right? It does provide value to the participating institutions in being able to cross-check the combined ledger, but because the audit capability, real-time audit capability doesn't reach outside those institutions, members of the public and small, medium-sized businesses who depend on them have no direct view on it and couldn't distinguish if it was, in error, for example, right? So I think the public auditability is important, and I also think in the longer term, the sort of open networks win. It's a kind of the internet phenomena where initially there was sort of policy concern about all kinds of industries sort of reshaping or changing, from journalism, media, by using the open internet, and many large companies started by using intranets to start with and move towards open internet. So many of the technologies can be amenable, many of the blockchain technologies can be amenable to both what you could consider intranet use, like permissioned ledger use, and later bridged or connected to the more open internetwork of value.
Okay, Brad.
I think while we're on sandboxes, and we're right to want to see more international sandbox activity, we should make mention of the Global Financial Innovation Network, that the GFIN, that a number of regulators have launched, that in part is designed to be or provide some of that global sandbox function. I think it's a great initiative, and if I was going to make one criticism of it, it's that its membership is still somewhat limited. I know it's been expanded recently. It's largely securities regulators. We would like to see it expanded to include more prudential regulators as well. But that is, I think it is really important to note that landmark, and they've only just recently, I think, opened the first cohort of initiatives that they're taking through that. So, we certainly want to encourage more of that international sandbox activity. The other last point I wanted to make was just to emphasise the criticality of getting your data right. And in some ways, it doesn't matter what technology you're using, but if you don't have the underlying data right and sufficient data, and enable data sharing, then you're always going to be shortchanged in some of your outcomes. And I just want to give a couple of data points out of our surveys from last year. We surveyed 59 banks and 2 mortgage insurers on their adoption of AI technologies in credit risk. And overwhelmingly, the #1 barrier to adoption that was called out was data, and being able to get all of your data into a single data lake. Obviously, a lot of banks are the product of a series of historic mergers. Some of the legacy systems are based on that. This is a work in progress, and you need to get this right concurrent to being able to utilise other technologies off that. We did a similar survey on machine learning and AML. And if I tried to distill down, and I sort of link this back to my earlier comments about digital identity, if I try and distill that report we did down to one conclusion, it's that you can turn on a technology today and you'll get a small uplift in your ability to detect suspicious transactions and catch bad guys. It's only when you enable the data sharing and the expansion of the reference data pool, the firm-to-firm sharing, the public-to-private firm data sharing, it's only when you get that you can actually enable yourself to potentially get a quantum leap. The Feeds Eye white paper talks about how you can get a 75% detection rate on fraud, and that they've been able to realise that. We're nowhere near that in the AML space because we don't have the same reference data set that we do in the case of fraud. So, again, I see the opportunities around digital identity. I see the decentralised nodes. If we can enable an information sharing environment, if we can overcome some of these localisation restrictions, I think there's enormous potential to make progress in the ability to catch bad guys, the ability to be more efficient and to facilitate transactions. But we do still need to overcome those particular barriers as prerequisites if we're going to realise that benefit.
Okay, thank you very much. And I think we should discuss more, but we are running almost running out of time. So, I'm very glad to hear from all of the panelists that because it's the regulatory sandbox type of approach is always kind of try to create a best practice on the area and to be shared. Then we need to be transparent, and then so that everybody understand. And also another thing from me is idea of a cybersecurity area, right? Cybersecurity area. Technology is always changing, and then when you mentioned about protecting data, then it's the same technology as other area of cybersecurity technology, right? Related technology. So in that sense, then the dialogue with many more people than the just kind of a financial system related people is going to be very much needed, I believe. So. In that sense, and we only have 5 minutes, 4 minutes. Okay, 4 minutes. All right, 1, 2, 3, 4. Okay, one minute each, starting from Brad.
Look, I'd probably reiterate the point I made about the need for the collaborations, and in particular between the public and the private sector. Pat Chalkis of the Ontario Securities Commission, one of the people on the GFIN that I mentioned, spoke in our event last week, and her comment was, we want to see more safe and secure innovation, and we want for that the innovators to come and engage with us earlier. If I quote one more factoid out of our machine learning report, there were a lot of the banks that are at the early adopter stage called out that they thought supervisor engagement, supervisor approval would be a barrier to them adopting the technology. Then they went and spoke to the supervisors, and they actually found the supervisors were very willing and enthusiastic and accommodating. So, from our side, we need to get over that barrier. We need to be more and continue that engagement, and we need to continue welcoming the, I think, what's been an environment of supervisors that are anxious to learn more.
Okay, thank you.
Okay, so I'm happy here to have that some kind of test case of multi-stakeholder dialogue here. And so I know that past 3 years, JFSA holding closed round table, so with many countries, many regulators and academia. And I know that so there are many fruitful results from that multi-stakeholder and multinational discussion, including identified technical issue, regulatory issue, or cryptography, many kind of things. They have that many fruitful results of discussion from multi-stakeholders. And I appreciate the leadership of Japan at the G20, and I hope that as a next step, so JFA Japan has another more broader this dialogue with a more broader stakeholder here. I hope that kind of thing happen in the future or next month.
Okay, thank you very much. That's a good point.
Yeah, so I think just to summarize a few things, I think open networks tend to prevail over closed networks in the longer term because of the innovation that it enables. I think it may not be readily apparent, but it's very important in order to fully realize the trust minimization benefits of blockchain for very high financial stability and high assurance issuers of stablecoins like Japanese yen, euro, US, to be part of the system because they're a kind of trust anchor for the existing financial world within that system. And you can't have a strong contract unless you can depend on the asset within it. So the crypto asset is mathematically validatable, but the Japanese yen is not mathematically validatable, so you need a trusted issuer for it. So I'm looking forward to seeing more high-tier stablecoins available in a crypto format and provide much better security and reduction of third-party trust in the current infrastructure of crypto asset exchanges.
Okay, thank you. So, Klaas?
Yeah, just one last reflection. I think to reap the maximum benefits of this, the possibilities that are offered in terms of information and data sharing, we also need to overcome a lot of data privacy issues, and that brings in another group of stakeholders that we haven't yet discussed about, and that is the data privacy regulators that are increasingly being created. They don't have as long culture and a structure, I would say, as prudential and conduct supervisors, let alone that there is the degree of international cooperation among them that will also be needed. This is already a challenge at the national level, but it will also be a huge challenge at the international level.
Exactly, and then beyond the area of expertise, and then so it's reaching to each of the expertise and one by one. So I believe that this type of the dialogue with different area of expertise is going to be very much beneficial of this subject for the future. So by saying that, then thank you very much, and please join me a big applause for the panelists.
Thank you. To end the seminar, Governor Kuroda will deliver the closing remarks. Let's welcome him with a big round of applause.
Thank you very much for your kind introduction. I am, of course, very much delighted to be given this opportunity to speak to you at the end of this important seminar. Today, we discuss two topics on the theme of our future in the digital age. The first session explored potential benefits and risks arising from financial and technological innovation. As a key to achieving a better society, speakers highlighted the importance of leveraging emerging digital technology in financial services. At the same time, they also pointed out the buildup of risks in the financial and economic system. The second session just concluded examined blockchain technology. The panel laid out key factors to facilitate a sound expansion of decentralized financial ecosystems. Ongoing financial innovation is anticipated to further impact the financial and economic system. Although it is difficult to predict the outcomes, we can learn from the progress and issues arising from financial innovation in the past decades. For example, credit and market risk management tools, along with risk transfer technology, enhanced financial intermediation. On the other hand, however, the global financial crisis was partly attributable to such progress in technology, which is still fresh in our mind. How then can we mitigate risks while benefiting from innovative technology? A good clue to that would be to interpret financial and economic activities as interactions within a system as well as among multiple systems. Examples include portfolio insurance strategies on Black Monday, which led to an unexpectedly sharp drop in equity prices through interactions among market participants. The recent financial crisis displayed a feedback loop between deteriorated liquidity in securitization market and severe funding conditions in the banking sector. Historically, the financial system has carried risk-amplifying mechanisms in an insidious manner that would pose serious threat to the system as a whole. People realize their mistakes only after unexpected disasters took place. The modern financial system has repeated such experiences. Innovative financial services and new entrants have begun to transform the structure of the financial system. We should reap the benefits of innovation while carefully assessing risks that build up unintentionally. Recent innovation also provides us with policy tools to address these issues. Incorporating big data into analytics reveals how individual market transactions and payment flows make up the entire financial network. Evolution in computing capacity and computational technology has brought changes to existing analytical approaches, which requires the simplification of the financial and economic system for applying theoretical models. Emerging technology allows us to observe details and to model the system as it really is, helping assess interactions among firms, individuals, and market participants. Technology that deals with unstructured data, including text, image, and audio, has evolved quite rapidly. It could also be applied to broader areas such as the analysis of market sentiment and expectation formation. Paradoxically, the more technology evolves, the more human aspects drew attention. These are closely linked to the actions of individuals and institutions. A deeper understanding of micro behaviors would help us better predict macroeconomic and financial outcomes. I hope this G20 high-level seminar has provided you valuable insights to shape the future of the digital age. Thank you for your attention.